on all the sectors in focus as well as the IT space. He says IT valuations are becoming more palatable now, but would buy IT stocks in the SIP format because we are heading into a recession. So every dip should be used as a buying opportunity, but don't buy in one shot because you could get better levels. Let's shift gears now to the real estate space. By the way, in that context, Soba's Q2 update has come through. The new sales are actually fallen both year on year and quarter on quarter. So that's interesting. 13.3 lakh units. The sales value though has gone up and realizations are looking very good. But in the context of more floods in Bangalore and all that's happened in the recent past, the question is whether these realizations and prices will hold. We have an entire discussion lined up. Knight Frank released their report for Q3. And they said that housing units sold have come in at a decadal high of almost 74,000. There's been a 35% year-over-year growth in Mumbai and a 21% rise in the units sold in the NCR region, even as interest rates continue to move higher. We are joined by Gulam Zia, the Senior Executive Director at Knight Frank, and Pavitra Shankar, the Executive Director at Brigade Enterprises. Lady and gentlemen, thanks a lot for joining us. Pavitra, I want to start with you. The Mumbai market, as Knight Frank put out their report, very strong sales coming through. Is that a market that would interest you? A lot of your peers have gotten into it as well.
Hi, morning everyone. Currently, our focus is actually on Bangalore, Chennai and Hyderabad. Mumbai, we know, is a great market. Again, it gets a lot of visibility. NCR as well. But for us, I think our focus currently is on the southern markets. This is the market that we know. They all have very good similarities with each other in terms of your target demographic, in terms of buying, preferences shown by customers, in terms of the IT economy as a driver. So we're confident with these markets that this is what will drive our growth for the next few years and for the near to medium term. So currently, no, we are not looking at Mumbai.
All right. Hi, Pavitra. Morning. In the past, I think you've said that ITES, bulk of your, or a large segment of your sales come in from that particular division. So good to see that the TCS management as well sounded rather optimistic. My question to you is that, RBI's hike rates were around, 190, 200 basis points in this year so far. What kind of impact has it had on demand? And if you could give us a couple of numbers of your total sales, how much is affordable? And out of that, maybe out of your total sales, if you could give us a sense about how many of those buyers take loans to buy flats. Go ahead.
Yeah, so in terms of our overall portfolio, affordable is what I would categorize as the government definition of below 45 lakhs and 60 square meters, at least in urban areas. A very small percentage, I'd say less than 5% of what we're selling today actually belongs in the affordable housing category. It's not really seen as much demand, I would say, from like a larger developer where it's really the size of the units that is making it affordable rather than, the location of the place or the kind of amenities or specifications of the product. Those are typically like a regular product. So almost 90% of our portfolio is mid-segment housing, and that's where we've seen to be the major driver of growth for us. In this segment, as well as affordable, we see at least 50 to 60% of our buyers take home loans. I would have actually expected that number to be more even when home loan rates were lower. But across our portfolio, we see it as being only around 50 to 60%. And this is despite many of our buyers being white-collar salaried workers. So the increase in interest rates, it is something to watch. So far, we have not seen any impact, but that's mostly because of the kind of product that buyers are looking for today. They're looking for larger, larger units, 3 bedrooms, 4 bedrooms, and so on. And ever since the pandemic, this has been the type of inventory that is extremely high in demand and also very low in supply today. So when a potential buyer comes across the kind of inventory that they're looking for, the increase that we've seen in interest rates is not going to hold them back.
Gulam, coming on this discussion, do you also believe that companies like Brigade, a lot of the premium guys, whether it's a Prestige, a Lodha, they really won't be impacted because of the rising interest rates? I mean, you spoke about almost 74,000 housing units sold in Q3, which is a decadal high. Is this a sustainable level, or do you think demand could get hit because of rising rates?
Since you're only talking about home loan interest rates, I would keep it to just that one factor, because there are multiple factors that affect the sales and performance of these players that you're talking about. Only home loan interest rate, I'll just give you one interesting number. Somewhere in 2010 or 11, I believe, the previous best performance in Indian residential sales was attained. And that time, the home loan interest rate is almost touching 10%. Okay, so today we are still at least 200 bips away from that. So there is no reason for us to believe that at least in these markets, which are the top 6-7 markets, next couple of years at least we're not too concerned about home loan interest rate alone making that impact. Of course, affordability is the key. And right now, the affordabilities are well in place, while nominal price rise has been observed in last couple of quarters, but that still is not disturbing the apple cart yet. So the point remains that, some little 50, 100, 150 bips increase in home loan interest rate is not going to have so much of an impact on the sales of residential units.
Gulam, although we are already at 9.5%, by the way.
Well,
one doesn't realize that slowly it's creeped up on us.
Not really. The transmissions are not entirely, like whatever you're talking about, 190 bips of increase that we have seen from the lowest has not been completely transmitted. So I'm still talking about some time to go. Where we stand, even the SBI is not even touching 8.5%. It is below 8.5%. So that's where it is. The transmission is also the key.
While maybe I need to talk to my banker because I'm at over 9%. I'm telling you from personal experience.
You're getting conned.
I wouldn't go that far, but yeah, it's. And I know, friends and colleagues, etc. So you're right. I mean, maybe the full thing is not being passed in, which means that even from here, there is more to come. And you're saying there is no impact, Gulam?
Not really. We would have loved to watch that, but we've been very closely monitoring the numbers. And quarter after quarter, in spite of at least 3 or 4 huge jumps that have come into home loan rates, in spite of that, the transaction numbers haven't really shrunk so far. And of course, it was the Diwali period is also oncoming. So all this has really had an impact. We have good sales that we've been observing, but year-to-date sales have been best in last 10 years. We are almost about going back to the numbers that we saw somewhere in 10-11. So that's what is giving me some comfort that the buyers are still fine with the home loan interest increase that is coming their way. We'll have to obviously wait and watch for another 1 or 2 rises. How is the impact on the market? But so far we have been observing not much of an impact. It's only going up.
No, that's good to hear. Pavitra, I think I've asked you this before as well. For the lack of a better way to describe it, right? The pent-up, it's almost, COVID was a shock to the system, right? It's maybe 10 years, 15 years out, we'll be able to finally kind of figure out what it did mentally to people as well. I mean, because it really jolted the real estate sales higher. People, were looking out, they wanted bigger flats, premium properties, etc., etc. So that push, is that what is still continuing? It was also a big dislocation, right? You saved, you could not spend for a while, so you were sitting on savings, and now that is getting released. So what's the runway? How do you think about that in terms of the momentum continuing?
Yeah, I would say the main thing that changed after COVID is a massive reevaluation of everything in life. And that sort of came to hit home quite literally, even in the way people were using their living spaces. So whether they were renting, whether they were in a 2-bedroom wanting to upgrade, everybody was sitting there, in their houses, sort of relooking at what they actually needed. And maybe some
companies. But the lone bright spot will be that cement demand has been